When the IMF makes a loan of a few $100 million, it expects the receiving nations to implement policies that the IMF dictates. In other words, the loan is only issued if the government agrees to all IMF objectives, and the IMF refers to the West. But what benefits do countries gain from joining the BRICS? So they receive the easiest billion-dollar loans to help their economy flourish. There is no blackmailing, as is common with Western banking institutions. The BRICS set up the New Development Bank specifically for this reason. This BRICS Bank recently extended a loan of 5 billion rands to TransNet, a South African state-owned corporation. Why was this loan extended? How would South Africa use it? And how can this BRICS Bank replace Western financial organizations such as the IMF and World Bank? In this video, we'll discover out. So, what's happened? Well, the BRICS have claimed their first triumph as an alternative to the Western-dominated financial and credit system. TransNet, South Africa's state-owned logistics corporation, just got a critical 5 billion rand loan, or around $283.53 million, from the BRICS New Development Bank, NDB. And this alters everything. Countries were previously dependent on Western institutions such as the IMF and World Bank, but this is no longer the case. The South African government has guaranteed this loan, which comes at a critical time for TransNet as it works to overcome a lengthy history of financial difficulties. South Africa may approach the IMF, but it would have to adopt policies that would have harmed the company, but benefited the IMF. But what is TransNet in the first place? And why does it require a loan? TransNet is a South African state-owned logistics corporation that has faced serious operating issues for years, limiting its capacity to deliver reliable rail and port services. With a significant debt of about 130 billion rands, the corporation has been hampered by equipment shortages, deteriorating infrastructure, and a backlog of maintenance. The implications of these difficulties have been far-reaching. TransNet's freight volumes have declined dramatically from 226 million metric tons in the 2017 to 2018 fiscal year to only 150 million tons in 2022 to 2023. This drop has had a knock-on effect on South Africa's economy, notably in critical industries such as commodity exports, manufacturing, and retail. According to research conducted by the Gain Group, a freight transport consultant, TransNet's operational problems cost the country around 1 billion rands in economic production per day. This loss is equivalent to nearly 4.9% of South Africa's annual GDP, or approximately 353 billion rand. But how did the BRICS New Development Bank become involved? The BRICS countries founded the New Development Bank in 2015 to fund infrastructure and sustainable development initiatives in emerging markets. Each of the BRICS countries donated $2 billion to the bank's equity, guaranteeing that all members share equal ownership and control. However, today, the New Development Bank has a capital of $100 billion. When TransNet's position became vital to its survival, BRICS members decided to provide it with a loan to support its growth. As a result, the NDB agreed to provide 5 billion rands to help resuscitate South Africa's cargo rail business. The monies are set aside for several major projects, including the renovation of rail network infrastructure, locomotive overhauls, and wagon fleet upgrades. They would save lives. These modernization efforts are projected to boost freight train volumes, improve operational efficiency, and increase service dependability. Ultimately, these projects aim to build a more sustainable and effective logistics sector in South Africa. But in what currency would the loan be provided? Well, it is one of the earliest loans made in rands rather than dollars. This method is consistent with the NDB's strategic goal of undertaking around 30% of its financing in local currencies. This adjustment reduces currency risk for the borrower and improves economic stability by reducing reliance on foreign exchange fluctuations. In addition, the BRICS Bank has announced that all loans and debt payments will be made in local currencies over time, effectively undermining the dollar's dominance in the BRICS alliance. As if eliminating the IMF wasn't enough, the BRICS have now delivered an updated shock to the West. So, can the BRICS New Development Bank replace the IMF and the World Bank? For decades, global finance has been predominantly dominated by institutions such as the International Monetary Fund and the World Bank, which were founded during World War II under the Bretton Woods Agreement. These organizations have been predominantly dominated by Western nations, and they have frequently been chastised for advocating economic policies that benefit those countries the most. However, the Western dominance is being challenged by rising economies. The BRICS nations' New Development Bank is a key factor in this transition. The NDB represents a novel approach to development finance that could serve as an alternative to the IMF and counter policies that have been criticized for favoring Western interests. It's because it's now an open fact that the IMF and World Bank primarily serve Western interests. These organizations are well known for placing stringent requirements on borrowing countries, including austerity measures, privatization of public assets, and market liberalization. Such policies have frequently caused economic hardship, social discontent, and political instability in poorer countries while benefiting wealthier neo-Vidshans with the most clout within these institutions. As a result, the IMF and World Bank's influence and importance have waned. Countries are realizing how these institutions create a never-ending cycle of dependency and a debt trap from which they cannot escape. On the other hand, emerging countries are gaining clout and beginning to question the antiquated conventions that have long regulated international economic interactions. The NDB has evolved in this changing global order, proposing a financial model in which all member countries, regardless of economic status, have an equal say in decision-making. Surprisingly, the NDB was founded in reaction to considerable unhappiness with the governance systems of the IMF and World Bank. These institutions have long been criticized for being dominated by Western countries, particularly the United States and Europe, which have the most voting power. This governance framework has historically permitted wealthy nations to dictate the conditions of economic assistance, frequently imposing neoliberal changes that have had detrimental social and economic consequences for borrowing countries in the global South. In contrast, the NDB was intended to be more inclusive and responsive to the needs of developing countries. It works based on equal shareholding, which means that all founding members, regardless of their economic power, have an equal vote in decision-making. This approach marks a considerable departure from the IMF and World Bank models, which relate voting power to financial contributions. By guaranteeing that each member country has an equal vote, the NDB fosters a more democratic and balanced approach to global financial governance, eliminating the possibility of any single country or group of countries imposing its policies on others. The NDB focuses on financing sustainable development and infrastructure projects that correspond to the interests of its member countries. Unlike the IMF and World Bank, which frequently impose harsh economic conditions on their loans, the NDB emphasizes national ownership of projects. This method gives borrowing countries more control over how funds are used, rather than forcing them to follow a one-size-fits-all economic policy. This concept preserves borrowing nations' sovereignty and allows them to implement development programs tailored to their individual needs and conditions. But the IMF does the reverse. The IMF team arrives and advises on how every penny should be used before approving the loan. However, the NDB is different. It was founded for the benefit of its members, not for its own. It has already demonstrated its effectiveness in reacting to global concerns. During the COVID-19 epidemic, the NDB donated more than $9 billion in financing to British countries' economic recovery measures. This financial assistance aided these countries in managing the economic consequences of the epidemic and adjusting to new post-pandemic realities. That is why the NDB's proactive strategy has piqued the interest of nations outside the BRICS, resulting in an extension of its membership to include Bangladesh, Egypt, Uruguay, and the United Arab Emirates. Infrastructure investment is one area where the NDB has a strong chance of making a significant impact. Traditional development banks, such as the World Bank, frequently struggle to meet the rising demand for infrastructure investment, particularly in poor countries. Experts estimate that these countries' infrastructure investment needs range from $1 trillion to $2.3 trillion per year. The NDB, with its emphasis on infrastructure, hopes to assist close this gap by providing finance for projects critical to economic growth and development. The NDB's policy is also more in line with the present geopolitical landscape. Unlike the World Bank and IMF, which were founded during a period dominated by the United States, Japan, and European countries, the NDB reflects a more multipolar world in which rising economies play a greater role. The NDB's emphasis on infrastructure investment is especially timely, given the global push for sustainable development in green initiatives. As a result, the NDB deviates significantly from the economic policies often associated with the IMF and World Bank. The NDB approach encourages partnership and equality, regardless of a country's economic stature. This is in contrast to the traditional model, in which developed countries frequently wield disproportionate power and can force their will on smaller states. By providing an alternate source of funding, the NDB decreases poor nations' reliance on the IMF and World Bank, giving them greater leeway to choose development pathways that best meet their requirements. What are your thoughts? Can the BRICS New Development Bank replace the IMF and provide loans with no conditions attached? Isn't it true that the International Monetary Fund and World Bank were founded to exert influence over countries by providing loans? In the comments box below, please express your thoughts on the fact that the BRICS Bank is removing all IMF monopolies and will soon be the preferred choice of every country. Would you like to see more videos like this one? If so, please subscribe to our channel and press the bell icon next to it. Thank you for viewing, and until the next video, stay tuned.